Equity Group has released the 2019 Q3 financial performance. The results show that pre-tax profit grew by 11% to 24.78 billion shillings compared to 22.4 billion over a similar period last year. Equity Group CEO Dr. James Mwangi attributed the profit growth to increased lending.
The bank has registered a profit before tax of 24.78 billion, up from 22.4, a growth rate of 11%, profit before tax, and a profit after tax of 10%, up from 15.8 billion to 17.5 billion. And that really prepares the market for commercial engagement. The scale at which the bank is operating is very, very high. If you look at women and youth trained in financial literacy, that is 2 million young people. Young people, we mean from the age of 24 to 35, the ones entering the economic space. And when you train 2 million, it means you have trained more than 20% of the entire country's youthful population.
Dr. Mwangi noted that equity strategy remains focused on achieving efficiency through regional expansion and growing income.
Looking back, we would say the last 3 years of interest capping gave us an opportunity to reinvent ourselves. We saw interest capping as a new norm. And so essentially, the bank has been able to reinvent itself. We are where we were before the interest capping in most of the aspects. We have fully transformed ourselves those 3 aspects. So interest capping removal can only be a bonus.
Loans to customers grew by 60 billion shillings to 348 billion, while net interest income grew by 10% to 32 billion shillings from 29 billion shillings.
This bank, it is at the center of economic activities. We have plugged the bank at the real economy. The real economy is in the private sector, and the real economy for Kenya is in MSME. And the emerging, graduating enterprises that have not become corporates, but they have become significantly large, and we treat them differently, either to finance agricultural activities or to finance social investments in health, in education. They are getting 74% of the allocation of resources.
Discussing strategic pursuits to grow income through non-funded income, Dr. Mwangi said the group's non-funded income grew by 14% to 22.5 billion shillings, up from 19.8 billion shillings. As a result, total income rose by 11% to 54.8 billion shillings, up from 49.3 billion shillings.
The barrier in merchant banking has been the cost of a POS. We've now gone to the mobile POS. Your phone is converted into a POS. The number of transactions has grown by 91% and 149% in the volume that is being transacted. Winning for us will look like when retail commerce stops using cash, and we buy sukuma wiki, we buy bread, and we buy milk at the kiosk digitally.
The CEO said the use of third-party infrastructure, mainly merchant and payment points, has enabled the conversion of cash and digital currency.
The customers were served in the branches if they wanted to buy foreign currency. Now they are buying it online. You buy credit to your account and you go and withdraw from the ATMs, or you pay directly from your internet, or because you have the foreign currency on the devices. That's the fastest growing delivery channel. If you look at EasyBiz, it has handled almost 320 billion shillings in volume. It now has outpaced mobile. So internet banking has taken and is challenging the mobile capabilities. So digitization now has gone beyond mobile banking to internet banking. And now the whole customer segment is digitized, and we are now in a virtual space.
The scaling of the business through geographical expansion continues to register impressive results, with the regional subsidiaries' contribution to the asset base reaching 27%.
It's very satisfying to see Uganda, Rwanda, and DRC are now able to have a return on equity higher than their cost of capital. So essentially, anybody who had been concerned about capital allocation now sees that the regional expansion strategy, the regional diversification, the management of the sovereign risk concentration has paid off. And these subsidiaries can only go one way, like they have been going, up and up.
Equity Group Foundation continued to build the capacity of micro, small, and medium enterprises to enhance their capacity to exploit opportunities to grow.
We are slowly moving from philanthropy. Philanthropy is where we started, in Wings to Fly. But now we are increasing social and impact investments. And if you look, it is entrepreneurship, it's agriculture, it's health, it's energy and environment. Things that we can transform society, but transform using an economic model.